All right, guys, I wanted to give you a little bit of a insight on the market in Calgary and kind of what I see happening. Okay, so after my 25 years of experience, because I've been doing this since the year 2000, I can tell you a lot about reporting. So first of all, I'm going to say this. The news gets it wrong probably as much times as they get it right. I don't even know if they get it right ever. But from being in real estate, my friends and clients are always asking me, hey, what's happening in the real estate market? So that I always say, you cannot average the whole market because different things are happening at different times in the market. So, kind of recapped my last month here, in the last even few weeks, I've entered in several situations where in one particular offer I wrote with another buyer or for a detached home, there was 5 competing offers. We won. We bought above asking price. Well, there was another one that we missed that same week that sold with 2 competing offers. And another buyer, we missed out on 3 or 4 houses because he didn't take action fast enough. And just last weekend, I showed a brand new buyer, and they listed a new house for sale, and it came in about 4 offers on that one. We didn't get that one. So what I want to do is cut cut some of this kind of rhetoric out. I want to give you some straight goods on kind of what's going on and show you why some of this is so, it's really hard to average anything. Because as you could probably understand, in a particular neighborhood or in a particular month, we could have 2 or 3 $10 million homes sell, right? If we had a couple of $10 million home sales, wouldn't that increase the average? Of course it would. It would skew the results, right? And it wouldn't tell you that maybe those $10 million homes were dropped from 15 to 10 to sell. So it brings the market average up when they actually had to reduce the price to get those properties sold, and they increase the market average. So it's nonsense to look at the market that way. What I like to do is look at things like the median price. I like to look at what property classes are selling. So the difference between apartments, like apartment condos, townhomes, detached, these guys are all different, right? And they have different factors that even the neighborhoods can make a difference on what's happening in that particular market. Hence why I got into competing offers on things, because of course, some of the more popular areas, popular neighborhoods are increasing in price, and some of the ones that are having a little bit oversupply, there's a possibility to renegotiate or negotiate on those ones. That's always a good thing, because the thing is that sometimes there's places you can go and buy where the market's going to improve in the future, and you can buy in now. In some areas, that are really hot right now, maybe it's not a good time to really be thinking about those areas. Maybe you can wait a little bit. Who knows? But it depends on what you're doing individually. So let's go back. I want to go to one thing here, and that is go to page 14 because I want to show you this. Okay, here's page 14. This is a pretty important page. So this is detached homes, because that's what we were talking about is, hey, what's happening in detached homes? Because do we really care about what condos are, what's happening in condos? Okay, so this is detached prices. Okay, so median prices where most of the buyers are buying. And as you can see, between 24 and 25, the median is about the same as it was. Meaning the median price where most buyers are buying is about 720, and that hasn't changed much, right? And of course, the benchmark price is kind of the higher average, and that's it. And it hasn't changed. Matter of it's scaling up, right? And then look at your numbers here. Look at your prices, your average prices on every month. They're up. Look at over this, each bar represents a month, right? Look at our last month in July. It's probably lined up with the same prices as we had before, with average sale prices for detached homes. So that isn't changing. Having said that, that doesn't mean that those prices are going up. It doesn't mean that they're going down, because all it means is this is what the average mortgage is on a house. People are getting qualified for this much, and that hasn't changed. Also, the good news is here is when you look at City of Calgary detached homes months of inventory supply, you can say, oh yeah, the last month is up a little bit, but is it higher than it was back in 2022 when the market was good? It isn't. So yes, was it extremely lean last year in 2024 in the beginning months? Usually it is. Like January, February, March, we don't usually have a lot of inventory supply, right? Well, why? People don't put their homes on the market, right? Is that cyclical, right? Here it is here it is here it is here, right? Now, 2020, did we have a huge amount of supply? Are we anywhere near the supply we had in 2020? No, we're not. And is it, I suppose our increase might be just the fact that builders have kind of caught up now and they're starting to build more homes. That's kind of a more balanced market. Now, in this graph here, this is actually the City of Calgary detached inventory and sales, okay? And this is a pretty good graph here. And our blue is the inventory, green is the sales, and our benchmark price is here. And the benchmark price is remaining pretty constant. It went up here in February, March, and April, and goes down. But you know something? This is what I would say is a non-change, because we can't really do proper statistics anything closer than a few percent. So from 745 to 765, in my view, where this line is a non-change. That's something that could vary in the best or the worst markets. So we can't say anything about that. Now, when we look at the amount of sales, which is the green from July this year to July last year, well, we're pretty much even. Nothing's really changed. Well, what did change? Okay, inventory. Where is that inventory coming from? And I can tell you from my own experience, it seems to me that the inventory is coming from new home sales. So that is good for people looking for newer homes. Now, the only problem is now, so they built a lot of spec homes. If you want to find a spec home right now to negotiate on it, hey, it's a pretty good time to do that, right? Because there's not so many homes on the market. Now, is the market collapsing? Well, we can see that, from here, it's not collapsing. It's remaining pretty steady. Detached homes, the price is remaining steady. It's not really dropping. People at the bottom isn't falling out when it comes to average sale price. And, what we need to see from these numbers is like, are people getting more square footage for the same price, right? That would be the most interesting thing to know. Are they getting new homes for cheaper, right? And I think that's a statistic that they won't do for us. But we need to know that. Okay, so one of the things I like to do when I'm doing trying to figure out what's going on in the market is try to figure out on a statistic that makes sense. Because obviously, if we're comparing, all kinds of different properties. We're throwing in $1 million homes. We're throwing in homes that are bungalows. We're throwing in, and we're trying to make a comparison. We need to stick with a statistic that is common, like the most common statistic we can find, and then we can measure. Because this overall average stuff, I can tell you from my experience, people, they look at the news reports, they look at things, and then we run out to look at a house, and they're totally disappointed because they thought the market was bad, and they get into a situation, they love a house, and it's got 5 competing offers on it, just like I said. So, and I'll say to them, look, yeah, but you can't really make an average on the whole market because it doesn't work. So one thing we can do is take, okay, what is the most popular sale? And one of the most popular sales is detached homes, which most people are looking for. So let's look at detached homes, and let's look at a specific group of detached homes, because I think that's important. Now, one of the things we need to compare, so if it's a detached home, what's one of the most popular homes you see anywhere in any neighborhood? Well, 2-story homes, right? 2-story homes, what everybody wants, with a double detached garage, right? And, if we pick homes that are built that are too old, we might find inner city homes. If we have inner city homes, what are the land values really high? So that might skew our averages. So let's try to stay out of that. So all the homes built in 1990 and up to 2025 is a good statistic to choose, right? And that would be, and then of course with square footage, we don't want to include any 3,000 square foot homes in there because, well, that would erase our averages up too. So let's say we'll take a narrower view. We'll say 1,700 to 2,100 square feet. That's a common square footage for a lot of homes, right? So that's probably the largest consensus of homes we'll be able to find, if that makes sense. Okay, so now what I want to do is just look at the market for I'll look at the market that just happened here, and that would be, let's look at our statistics here from the criteria I selected was 0 to 60 days. So we're at the end of August, so let's pick the 60 days here. The same statistics, everything's the same here, and then we'll be able to come up with our statistics from this. Okay, so let's look at the stats for all sales. So there's 253 sales. And our median price is $710,000, selling at 98.52% from sales to list price. Now, that means that there's not a lot of negotiating, right? Now the average is 98.6%, isn't it? The average days on market is 34 days. Now 34 days is not a long time. Like that's that tells us that that's a pretty good, pretty good ratio. So days on market is for the sales is a pretty good one. And now for the maximum price one, the days on market was 220. Well, think about that. Whatever house that was, it was 2,100 square feet and sold for 1.13. That's, you know, that's unprecedented. It has to be something different and unique. So here we go. So that's only one house out of the 253. Now, if I do the same result from that same test and go back for July and August of last year, here's what I get for numbers. Okay, 246 sales. So there's no difference in sales. Sales are actually almost the same. And then the average sale price was selling 99%. Well, 1% is nothing in my view. The closed average sale price was 728. Granted, that's a little bit higher. And median was 721. So median means that's where most of the buyers are buying, 721. Now, from my point of view, that to me looks like a non-change. I mean, it's maybe a change of, well, what is the percent of change? What is $10,000 on 700? It's a non-change. And any statistic can be off by that much anyway. Now, the market, for days on market, yes, it's more relaxed. Because last year that was 19 days on the median and 28 days on average, right? So that means that the market's about a week faster than it used to be last year. But that's, that's okay. It gives you a little bit more time to make your decision when you're going to buy. But are the prices dropping? Absolutely not, right? Prices are staying almost where they were. Will they drop in the future? I'm saying no. I don't think they will, and I'm going to get to that in a little bit. So honestly, one of the things I'm curious about right now is, and I put this in here, 1990 to 2023, because my curiosity is of what percentage is the market brand new, and has it changed? Like, is there a lot more new listings from builders? Now, it's difficult to get this number because builders don't list every property they have, but we might have some indication of sales by doing this. I'm not sure exactly how it's going to work out, but so we had 291 available listings right now in that period, which aren't new. And let's just look at our criteria here for. We got to find our criteria. Okay, so I did the same thing with our date range last year, and I came up with 233 homes from our last search, right? Which was here. So we're looking at number of new sales. So one of the things I would love to be able to track, which I cannot track because I can only look at active listings. I can't look at how many listings were actually active of certain groups in certain neighborhoods. But I suspect from what we'd find, if we were able to look at year to date, if we were able to find new listings, new inventory on the market, instead of the pre-owned market, I would say that our new market is a lot higher than it was before. Meaning that the builders have built a lot more houses. And I think that's probably why we would see the market have a higher supply of inventory, because builders have caught up to a lot of the market demand that was there. It's always the way it is. And when we go through these these times in the market, what we find is that, when we have very, very bullish markets and there's a lot of activity, a lot of sales, the builders don't have enough product available. It takes them about a year and a half to build enough inventory, and then there's more inventory. And so that is what has happened, and I believe that it's all the new inventory. But of course, when we're talking about active new inventory of product here, these are not of the homes that you're necessarily interested in. And so when we look at this is the typical house, right? And you're not looking for the typical house. You're looking for something a little bit grander and bigger than that. So when you're thinking about that on these bigger homes with water and walkouts and everything else, I think that's a good time to get, they have more inventory. It's a good time to get those, to buy those houses right now, just because there's not so many of these locations. I find that when you find a water location or a view location, those are the ones you need to really kind of jump on, because then on any given time there's not very many of them I'm going to find. And if I was to just look right now to see, okay, how many view locations is there in any of these neighborhoods that you might like, I'm going to be very hard pressed to find any lots that are going to be, backing onto a pond. And I would suspect that at the square footage range that we're talking about, I wouldn't find any, right? I wouldn't find any locations that are going to be available. What you'll start to see more and more of now that the market is getting a little bit oversupplied, and especially with the new builds, is you'll see that they'll start popping up as a lot of new listings. So as they'll have spec homes more and more available, right? So, but the problem is again, is going to be the areas. Now, one of the things, like you were looking at a house that was like backing onto the pond here. I believe this is the pond you were looking at here, one of these houses here. And one of the things that is exciting about looking at these kinds of homes is, as you can see, how many ponds is there? 1, 2, 3, 4. How many will back onto a park or back onto a school? There's not that many, right? Here's one that's backing onto a pathway. These are premier locations, and so when the market slumps a little bit and people get under bad news, it's a good time to buy. And now I wanted to get into why I think the market's going to probably improve in the next year. And being at this for 25 years, I can tell you every cycle I've seen has not been much different. And keep in mind that the housing market isn't like the stock market. It doesn't fluctuate like the stock market. And the reason is because people have mortgages. Because people have mortgages, they buy a house 2 years ago and they put 5% down. They can't afford to jump out of that house and buy their way out of the mortgage. That property can't sell below its mortgage amount because no one can afford to sell it. So it either just comes off the market. So the market isn't free floating. It doesn't float down like it floats up. It jacks up and it doesn't flow down. So what I've seen in markets where it gets tougher is less and less listings. The reason is people say, hey, if I can't sell for my price, I'll have to dig in and do whatever I have to do to make it work, because I can't sell my house for less than I paid for it, because I don't have the money to pay the mortgage if I sell it. So that's what happens. We don't have this opportunity that people can just dump their prices, right? So that's important to understand. And okay, so here's why I think we're going to have a continued inflation of prices. Because I heard this yesterday. I've been talking to some friends about this. And usually our interest rates follow the U.S. market. I don't know why our financial markets follow the United States, but it seems like when they drop interest rates, we drop interest rates. Have you ever seen a market in 20, 25 years where our interest rates are high and the U.S. were low? Or vice versa? Have you ever seen that? I haven't seen it very often. Usually the reason why they're trying to reduce rates in the United States is, first of all, I think that it's very political in the United States right now. The Biden government had raised all the interest rates, and Trump wants to reduce them. Trump is trying to fire the Treasury, the Federal Reserve manager Cook, right? He's trying to fire this person, and what I think is happening is that they don't want to drop the interest rates and have a bustling economy under Trump. So the Democrats are trying to use their influence to affect the interest rates, to suppress the market so that he has a bad term and a bad economy during his time as president. So I think that's really what's going on there. And so what will happen is that Trump has been saying, look, you got to drop interest rates. And they're saying no. Trump is going to get his way. Trump said he'll have to have a Fed majority soon to push rates lower after firing Cook. So that's what's going to happen, And if you argue with that and say, no, it's not going to happen, I think it's going to happen. And when it does happen, our rates will follow. What happens every time the rates drop on interest on houses? The market always goes up. People that suddenly couldn't qualify for 750 now are qualifying for 750. So a whole bunch of buyers can get in and buy the house they always wanted. So when it pushes the market up, people have equity they never had either. So let's say that market goes up 50,000. So when it goes up 50,000, people say I have 50,000 equity. Now I only had 5% before. Now I got 100,000 equity. Now I can buy the house I wanted. I can buy the 900,000 house. So everything ladders up. Everything moves up. And when I started as an agent, the interest rates were at 7.5% in the year 2000. And slowly they started to lower them. And by the end of 2005, they were at 4.5%. People thought that was incredibly low. They couldn't believe how low that was. And so, it took about 2 or 3 months. And then, the homes that I'm showing you here that were sold like a typical 2-story home that was 2,000 square feet with a double attached garage and 3 bedrooms, that home in 2005 was $225,000. Can you believe it? Okay, so it happened by the end of 2006, because the rates were pushed down to this 4.4, 4.3. By the end of 2006, we had such a crazy market that the prices on that same house were about 430,000. Prices almost doubled on all of the detached market in 2006 as a result of the lowering of interest rates. So it's something to keep in mind. And I think that when Trump does this, now you might say, okay, yeah, but what about the tariffs? Well, the tariffs are hurting our economy, that's for sure. But Alberta, is a different nut than the rest. I think that the rest of the country is going to have a hell of a time, because places like Ontario and Vancouver, they're very, very overblown markets. But Calgary isn't. Calgary is still a relatively inexpensive market compared to a lot of markets that there is. So those two markets are way above where we're at. So my thoughts is that people are slowly trying to get their money out of Vancouver and Toronto markets, and they're trying to put it into the Alberta market. Now, we might even have a vote on whether we leave the province, leave the country. The province leaves Canada. I don't know if that's going to happen, but I'll tell you this: it's not hurting our economy here, because people are bullish about our economy just because of that factor that we have going for us. And I think the oil and gas people are pretty adamant about doing something about it. I think that our current premier is doing a great job of trying to keep things going here, and I think she's going to be successful. So I don't see Calgary or Alberta pushing down and going into the toilet like I saw in 2009. Okay, 2009, after our big push, it went down. But did it go down? Like, that's another thing. The market in 2009 never ever went back to 2005 prices. Never. We got to 430,000. Then we got, by 2008, we were kind of hitting around average price around 480,000, somewhere in there. And then, we dropped another 30,000 on average for sale price for a single family home by 2009. And we had an oversupply of homes because the builders caught up to the demand and built a lot more homes. So I guess my point is that I see that the market is staying, fairly strong. And I can't see, with inflation, the way that the government's spending money. And don't forget, our problem isn't people's spending habits in this country. The problem is our government spending habits in this country. Inflation is a result of excess government spending. And what they're doing on a constant basis is, like, didn't you just hear that Canada's going to give $2 billion to Ukraine? Of course. And so when that happens, people say, oh yeah, well, where did that money? Nobody asks where that money went. Nobody understands what happens to that money. The only place that $2 billion has value is in Canada, to buy Canadian assets. So that money has to come back to our country. So the money that we work for locally, think about this, the money that we work for locally that the government gives away devalues what we worked for. The money we work for that the government gives away devalues the money we work for. Doesn't mean it's less money, it means that our money doesn't buy as much. All that free money that's been given away abroad is coming back to Canada. It's going to buy commercial real estate. It's going to buy whatever it has to buy. It's going to buy, our minerals, our resources, our real estate. It's going to buy everything. Because if Zelensky has money, he has to spend it here. He has to trade it to some, or he has to trade it in whatever currency he has to trade it in. But the money has to come here to buy a Canadian product of some kind. So, which people don't understand this is that they think that the money went there, and it's like they don't think that we gave it away somehow, but they don't realize that it devalues their money. Now, when they devalues the value of our currency, it pushes the home prices up. So these drunken sailor spenders, liberals, they are going to keep on devaluing the currency just like they've been doing and keep driving inflation up in our country. And that's just how it's been working. And this, if I'd understood this, when I started in real estate, I would have bought every property I could have bought because I never thought that a $230,000 home would go to $750,000 in my lifetime. I would not have thought that. But I didn't think that my little $265,000 home I bought downtown in 2003 would be worth over $1 million in 2006. I never thought that. Turns out it's all the same thing. It's all the same reasons, right? And I always thought, oh, I missed the push. I missed the push. I missed out. I should have bought in 2004, 2005. Man, was I wrong. It never changed. I thought, geez, I missed 2006. I should have bought then. And because I didn't buy then, I missed out. But I could have bought in 2009. I could have bought in 2010. And still, what happened? In 2010, the average two-car garage, double-attached garage home, two-story, 2,000 square foot home was, was 525,000 from the builder. Now it's 750, and just because of the Trudeau era, because they spent so much money. And you will never time the market. As I've been in real estate for 25 years, I can tell you this honestly. You will not know when the change is going to happen. The day that the interest rate changes, it's too late. That's the day it's too late. And so unless you're a politician or you're somehow connected internally with the financial markets to know exactly when they plan to announce a rate cut, you will not know when that day is going to happen. The best you can really do, from my 25 years of experience, is buy when they feel that the market is soft. When there's bad news on television, that is probably the best time to be considering buying. It's because we won't know when the dip is. And even if there's a dip, just like there was after 2006, the dip isn't 50%, 30%. It's nothing like that. It's like 0.5%, 5%. It's nothing that really means anything at all to anyone, because you can't really, if you're waiting for that big dip, it just doesn't seem to happen. Why? Well, again, it's mortgages, right? Mortgages, people cannot drop their prices below their mortgage amount, and they won't even drop them below the commission amount. So they can't even afford that. So if someone has bought a house 3 years ago and they paid 700,000, and they put 5% down, well, that 5% is what's holding the market, because they can't put out houses for anything less than that 5% drop, right? Because if the seller has absolutely no equity, they can't buy their way out of that. So the properties, what they do is, if the market dips and the properties don't sell, they come off the market, and then there's actually not available homes to buy, because the only one that will put out homes to buy during those markets, like 2009, will be builders, right? And so the builders' homes will sit. The seller will say, I can't sell right now, so I won't. And so then it becomes an inventory of new builds, right? Obviously, by the report that I've just shared here, there's not an excess of new builds that we can just say, well, there's so many new builds that they're going to drop. It's not happening. So they're trying to meet the demand. They're bringing those inventories up. And my experience with the new builds is that a lot of people don't necessarily like them. They're not gravitating towards them. So some of the things they're building are good, and some of them aren't good. Some of the locations are premier locations. Those locations are always going to be in short supply. So have a think about all those things I proposed to you. When you're thinking about the market dumping, even if the market dropped a little bit for a few things, I'm just thinking it might be a good prime time to think about buying right now because, if these guys, these drunken sailors spend so much money that we end up having inflation again, you don't want to miss that. And if the market's at a little bit of a lull right now, it might be a good time to buy before things happen. Anyway, with that said, I hope I've given you a bit of information to help you out, and let's talk soon.